Well, as we reported in the news, the World Gold Council has just released its gold demand trend report for the second quarter of the year. It shows that investment demand for the metal rose 46% from the prior year. Joining us from London to take us through the trends is Rozanna Wozniak. She's Investment Research Manager at the World Gold Council. Good afternoon, Rozanna.
Good afternoon.
Rozanna, perhaps talk us through some of the fundamentals that are underpinning this demand for gold at the moment, and also the price of gold.
What we've seen underpinning the demand for gold is those investment flows. We went through this period where those investment flows were absolutely huge. They've tapered off somewhat. We've seen investors looking back at taking on risk, confidence has improved, and yet those investment flows on a historical basis are still very large. I think investors have gone on from thinking of gold just as a safe haven. They're actually starting to think of it as an insurance policy.
Of course, we are talking about investment demand here, but total gold demand was down 9%. And of course, we have seen drops in jewellery demand, industrial demand. Where do you see it going from here? Do you see an improvement?
Actually, for the foreseeable future, I see a bit more of the same. We've got demand for gold that's quite diverse. We've got a couple of sectors there, jewellery and industrial, that are positively linked to the economic cycle, and the downturn in the global economy has impacted negatively on those sectors. At the same time, we have a component of investment demand that's counter-cyclical and is benefiting from what's happening in the global economy. We've got investors around the world that are rethinking their asset allocations, their attitude toward risk, and looking at putting just that little bit aside into gold.
But if you say that jewellery and industrial demand are cyclical, investment demand is counter-cyclical, as we see the economy improving, would you expect industrial and jewellery demand to pick up and investment demand to fall back?
Interesting question. You would expect jewellery and industrial demand to start to pick up. As far as jewellery goes, there could be a lag there because employment is a lagging indicator, and of course employment and incomes are important. On the investment side, however, if growth starts to pick up, you would have to believe that inflation becomes a problem, because sooner or later all the stimulus that's coming in, the fiscal, the monetary stimulus, the quantitative easing, you'd have to believe that's going to start to kick in. And gold is well known to be an inflation hedge.
Well, given that the US has painted a very anti-inflationary picture at the moment, we've had the US Federal Reserve Chairman saying that he doesn't expect inflation to become a problem. They're not going to start unwinding all of the monetary stimulus at this stage. Do you think that that's going to spur demand for gold at the moment, given that there isn't going to be any inflationary headwinds?
I think investors are actually looking forward. You're correct. Central banks globally are more worried about deflation now, and they're more worried about recession. However, the issue is that those central banks need to always be thinking 12 to 18 months ahead. And no central bank is confident enough yet to really have any confidence in what's going to happen to the economy that far down the track. So the issue of inflation is not necessarily this year. It may not be till next year or even the year after, but investors are looking forward.
Rozanna, apart from being seen as an inflation hedge, gold is also seen as a safe haven. Would you have expected demand for gold to have been stronger, just given the very volatile situation we've seen on global markets over the past year?
We did see phenomenal flows into investment in the second half of last year and the beginning of this year. And it's just in the last quarter they've started to taper off as confidence has started to return. But as I said, those flows in the June quarter were still 46% higher than the same quarter of a year earlier. And I think that actually shows that investors are starting to think of gold rather than just as a safe haven. It is that insurance policy for the future. There are plenty of assets out there that do well when the global economy is booming. It's actually been shown that it's very difficult to find those assets that will hold their own during a period of crisis, and gold has done just that.
Rozanna, what sort of form are these investments taking? Are we talking about exchange-traded funds, gold bars, coins? What are investors looking for there?
We've seen bits and pieces of all of them. In the March quarter of this year, the flows in through exchange-traded funds were phenomenal. In the second half of last year, we saw investors globally moving into bars and coins. More recently, we've still seen the strong flows into bars and coins, more so on the western side. But overall, we've seen bits and pieces of all of them.
Of course, exchange-traded funds are becoming increasingly popular. Would you expect that to continue? Do you see more demand for those ETFs?
Over time, yes. It's not that long ago that there wasn't really an easy way or accessible way for ordinary investors to get access to gold. Not everybody wants to buy a whole bar or even a coin. The beauty of ETFs is that the advantage of them is the fact that you can buy in small parcels. It's relatively simple, and they're still backed by allocated physical gold sitting in a vault. I mean, minimum, one share is worth 1/10 of an ounce, so it is small parcels are possible.
So would the ETFs, do you think, be popular for South African investors, and particularly small investors, as we're not allowed to hold physical gold apart from gold coins?
I think they're going to, I mean, we've seen tremendous growth in those ETFs since they were launched. And I think we are going to see more investors becoming accustomed to using them in different parts of the world. I know some institutions and some investors in some parts of the world still haven't quite got used to what they are and don't understand what they are, but that process of building that knowledge is ongoing.
What sort of recovery are you expecting from some of the key jewellery markets? I'm thinking perhaps about the Middle East and India. Do you see a pickup in demand for jewellery in those markets as the economy starts to recover?
The jewellery market's been very interesting. There are some parts of the world, particularly the developed parts of the world, where it's the economy that's been the biggest influence, the slowdown in the economy, rising unemployment, that sort of thing. There are other parts of the world where the biggest thing for them has been the price. So if you look at the June quarter and June quarter of previous year, the increase in US dollar terms of the gold price was 3%. In rupee terms, it was 20%. In Turkish lira terms, it was 28%. The jewellery buyers in those countries are quite tactical. When the gold price shot up during the second half last year, early part of this year, those jewellery buyers were actually selling some of that jewellery back and recycling it. That wave of recycling activity has now passed, and all indications are that some of those buyers are looking for opportunities to come back in. We've seen pockets of buying coming in at around 900, 910 an ounce, but at this point, the price expectations haven't fully adjusted after that price rise. In India, for example, we've also seen the trade destocking a lot. They're sitting on low stocks, and if demand does start to pick up, the industry itself would have to start rebuilding those inventories. So yes, there's sort of some cautious optimism in there, but still some uncertainty as to exactly when it's going to come through.
How about the gold price itself? Where would you expect that to go? I know it has battled to get back up to that $1,000 an ounce level, been hovering below that for the past couple of months. Do you think that gold will go back above $1,000 an ounce in the short term?
The World Gold Council does not forecast the gold price. It's been interesting in the last 6 months or so, because while we've seen volatility in some of the other commodity prices, the gold price in fact has been quite range bound. And one of the important things that we are seeing is that strong support coming through, not just from the markets, but also from some of those traditional jewellery markets, because as I said, some of those jewellery buyers are looking for the opportunities to come back in. At this point in time, they are still hoping for a bigger dip before they really come in any big way. But sooner or later, they're going to have to decide whether a new floor has been reached for the gold price and make a decision as to whether to wait any longer or just come back in.